really quick.
Get the recorder. All right. Do you wish to install? No. How's it going? I hate those girls. Soft Jeff. All right. Got the recorder going. Going to do global macro update very shortly here. Pretty quick one today. Not a lot to go over. Mainly just talking about the S&P 500. Do see some weakness, and then that would be possibly a good opportunity for a DXY long, because when the stocks go down, DXY goes up. Everything's a pair. And that's basically the video for today, it really looks like. All right. Let's get our recorder and start this here. Welcome traders to another global macro update. In this video, it's going to be a little bit quicker. We're going to touch on some interesting news topics for today and then going right into the charts here. So first things first, we're going to look at what the IMF stated. We can see IMF says that the world will very likely experience worst recession since the 1930s. And this is the IMF saying it. The fund expects a partial recovery in 2021, but this is conditional on an improvement in the health crisis. The global economy will this year likely suffer the worst financial crisis since the Great Depression, the International Monetary Fund said Tuesday, as governments worldwide grapple with the COVID-19 pandemic. It's very likely that this year the global economy will experience its worst recession since the Great Depression, surpassing seen during the global financial crisis a decade ago, Geeta Gopinath, the IMF chief economist, said in the latest World Economic Outlook report. And, not going to dive on it too much further. Obviously, that's not great news for individuals with long-term investments who are losing jobs. It's a very difficult time for sure, but looking at it in a trading opportunistic mindset, this does provide an opportunity, and this is a great quote we got from an individual from, I believe, Wall Street Journal, where he said, when the bear market does finally hit its low, you are unlikely to even be asking whether the bear market has breathed his last. The bear has breathed his last breath, basically. You're more likely at the point to have given up on equities altogether, throwing in the towel, and cautioning anyone who would listen that any rally attempt is nothing but bear market trap to lure gullible bulls. I completely agree. If the IMF, if major funds, if very, very high level professional individuals are saying stuff like this, saying that this is the worst recession since the Great Depression in the 1930s, how in the world can the stock market, how in the world could that be the bottom? Accompanied with every single bear market, this is usually how it goes. It's not the first pullback. There is still a lot of positivity in the atmosphere. In my personal belief, a lot of people think that the bottom is in, and I'm super skeptical of that, and I am looking for short opportunities due to the aggression of the move down, due to the fundamentals. We already looked at all the different stats, looking at the initial unemployment claims, continued unemployment claims, looking at the balance sheet. There's no way that this is a healthy market in any shape, way, or form, and in my opinion, we're going to have another dump down. Quickly talking a little bit more about our home, Canada, more or less lower mainland here. For the city of Vancouver, for all you Canadians, the city of Vancouver is at risk of going bankrupt. A city is potentially going to go bankrupt, says the mayor, citing recent polls showing more than half of property owners are not expecting to pay full property taxes this year as the financial woes take hold. Now, the actual property tax is a huge bulk of Vancouver, the city of Vancouver's revenue. So this is going to cause a huge squeeze for them. So we can see in a press release on Sunday afternoon, they said that they'd lose up to $189 million in revenue, and in 2020 it could be as $325 million. And the city's already laid off 1,500 workers. Losing $500 million in operation funds in 2020 would be devastating the city's financial positions, forcing us to liquefy assets and exhaust every reserve fund we have just to avoid insolvency. Property taxes make up a bulk of the city's revenues. And if you think, every government can print money, every central bank can print money, but these little municipalities, local governments, provincial governments, they can't print money, right? It's illegal for Vancouver and other local governments to run deficits, aka print money. The central banks, the Fed, Bank of Canada, they can print as much money as they want. They can run unlimited deficits. That's not a problem. They have any problems, just print more money. That's really how the process works. Whereas for smaller municipalities, small local governments, they don't have that. So what do they need to do? They need to either lean on the federal government or the provincial government for help, or they would have to increase taxes and basically tell workers to go home. Local governments will be forced to take drastic measures that will hurt residents and businesses and significantly slow any post-pandemic economic recovery. So basically, increasing taxes because they need to get that revenue somehow, and then they also will probably lay off a lot of people, firemen, police, park attendants, or whatever other menial, less important tasks need to get done. They won't do them because they just don't have the money to. So we can see really everyone is getting squeezed, right? It's not just big banks, it's not just small businesses, it's not just airlines, tourism, restaurants, bars. It's an entire economy contraction where it's a huge deflationary event. Basically, every business is getting hurt unless you're a completely digital business. E-commerce is even getting hurt if you're selling like entertainment products, but you're pretty flexible in that regard. Trading, obviously, literally zero change in my personal life, but in terms of the economic instability, in terms of the millions of people losing their jobs, it's definitely very, very detrimental to the economy, and I just don't think that this could ever be the bottom. Look at 2008. Basically, everyone in my kind of list of who I like to listen to for global macro is saying that this is worse than 2008. And 2008, we had a 55% market correction in the stock market. In 2001, the dot-com crash, it was around 50%. Our low was 30%, which means that unless the Fed is going to do the unthinkable and literally print as much money as they need to prop up the stock market, which in theory they can, I think, do that. Just print as much money, keep the stock market afloat, but that will cause, in my opinion, inflation. Yes, the stock market will be able to maintain its value, but all other asset prices and prices in general will be going up. So, yes, we might not get that short we're looking for with the SPX, but if the government does go ahead and basically provide unlimited QE to keep the stock market afloat, I think the inevitable, which is inflation, will happen. So in that pathway, in that journey, I guess, there would be a huge opportunity in gold, silver, and cryptocurrencies due to the fact that they have a fixed supply and you can't print more of them, and people will recognize that. That's one road that we could take. Another road we could take is, in my opinion, is a more deflationary approach where the Fed is unable to actually prop up the stock market. We do have that major market correction we're looking for our opportunity to the downside, and we capitalize on that. But then the difficult thing is Bitcoin's probably going to go down with it because it's still a risk on asset that's correlated within the more traditional markets like the S&P 500 and the Russell 2000. It's more correlated with the Russell 2000 due to the Russell 2000 being more speculative, being small cap, compared to the S&P obviously being a large cap index. So that's a little bit of global macro, kind of trying to understand the bigger picture of things. Let's now dive into the charts. Like always, we'll start off with the commodities, gold and silver. All right, so like I said before, silver and gold, definitely more bullish. I am still bullish on gold. I don't have an entry yet. I am still looking for that nice pullback to validate the 1700. We did draw this previous trend line in connecting these highs here. So we do have a respected ascending zone. I wonder if I could connect it anywhere else. Not really. I think beyond here is a little bit excessive. Let's just keep it nice and tight just within the current structure of the market. So this is kind of what I see right now is we see a wedge and it's kind of forming a squeeze here, an ascending squeeze, which I don't mind. I don't really see any line here, but what I'm mainly looking for is a nice pullback. Let's get our rectangle. A nice pullback to around here would be a good opportunity in my personal belief. Just classic, resistance turning into a new support. We see it's a clear uptrend. We see clear higher lows coming into the market. If we do get a nice little consolidation and a hold with this zone of confluence where you see the ascending zone and the horizontal zone come together at a single point around 1700, that would be a pretty decent situation in my personal belief. But I am going to remain a little bit more cautious with gold due to the two possibilities that I just described. Either the deflationary situation where the Fed can't keep up markets and we might have like the second round of basically all assets going down. Gold might favor a little bit more and hold up a little better, but at the end of the day, it would be pretty deflationary. But if the Fed is able to hold up the stock market, then gold will be extremely bullish because they'll be printing literally as much as they need. Unlimited QE, that's what they said. Unlimited money printing. That is unbelievable to think about, right? You will get devalued, debased so quickly in such a short amount of time if they are trying to basically never have a bear market, because they'll just continue and continue and continue to print money. All right, so very, very simple analysis on gold. Let's quickly look at the daily here and understand why we're thinking about this possible zone for a buy. So looking on the daily chart, we talked about this yesterday. This is the previous resistance, previous resistance, previous resistance. We see a market structure higher high, and then we just connect the higher highs to put a potential resistance, which we obviously are rejecting off right now. And now we're pulling back to validate the previous resistance as a new level of support. We didn't really see any validation yet of this previous resistance around 1700. So I am looking for a validation of this zone of a new level of support before we make a move up to around 1800, which is our next level of supply. I'm definitely looking bullish, but it's a little bit worrying because we do have this wedge pattern, and I think we could see another potential move down, but at the end of the day, I'm going to keep it simple. I'm going to trade with the trend, and this does still look like a pretty valid pattern for an opportunity in my personal belief. But yeah, at the end of the day, we still want to see validation of buyers within this zone before we look to long. And also looking at market structure, in my opinion, this does look like a nice reverse head and shoulders. Let's say this is the breakout point. You see a nice left shoulder, head, right shoulder, and now we're around here. We're looking for that nice pullback to create the higher low. This is a low, higher low before the impulse move to the upside. So we can see right here, this is the left shoulder, head, right shoulder, breakout, pullback of the $1,700 resistance, new level of support would be a good opportunity in my personal belief to look for a long opportunity. But at the end of the day, we don't see it just yet, so we're not going to take action. But with all this money printing on the more longer term outlook, I'm super bullish on gold, extremely bullish on gold and silver, because they are going to be where investors are going to turn to for safe haven assets. Bitcoin is still a bit of a speculation, but I do think that it will gain a significant amount of traction. Because digital gold, in my opinion, is just a better version of it. Obviously, some people don't agree, but that's just my take on it. So that's gold. Very simple, not too difficult, not too complex in terms of what we're looking for. On the 1 hour time frame, we see a nice little minor zone of support sitting at 1710. We can just see that right here, but we are creating a series of lower highs, like so. So we could get a little squeeze here, which I wouldn't mind pushing the price down to around 1700, and then we get a nice little move back up here. That would be really ideal. So let's get our snip here. So we understand that this is a strong level of demand. What we're looking for is ideally to see the price continue this descending zone, creating a descending triangle pattern. We see a minor level of support. It'd be good if we see a dip below and then a break, pullback, and then explosion. We'd be looking really aggressively to enter on that pullback after we get the
recovery below our minor level of support. That, in my opinion, would be a really good opportunity because we see it break a market structure support, which should be a little bit bearish, but if we get a recovery, that recovery will signify the strength from the bulls. So in my personal opinion, that's what I'm going to be waiting for. Very kind of similar to this, where we see, let's just make that a little bit cleaner. We saw a descending zone like this. You initially saw a support turn into resistance. Once it validated the previous resistance support, when it validated the support into a resistance back into support right here, that is a really good opportunity in my personal belief. And then you got a huge move up after that. So kind of the same sort of structure where we get these nice wavy patterns kind of like that. So being able to enter at the completion where you have the highest probability break would be a good opportunity in my personal belief. So we are bullish on gold. We're looking for opportunities, but as of right now, I don't really see anything that I'd like to enter, but we're always on the lookout. That's going to be gold. Let's look at silver. Silver, like I said, is not something I really want to be entering just yet. Still looks a little bit too bearish. Look at the weekly. We see a series of lower highs. We did get a higher high from here, but looking at the structure of the market, we see that there is high, lower high, lower high, lower high, lower high, all these lower highs pushing the price down, and I'm just not convinced that we are going to make a massive recovery, and I'm just not really looking to enter silver right now in a personal belief. I just think that if we are looking for any bullish opportunities, gold will be a much better bet than silver. And if we're looking for bearish opportunities, silver is going to be a better bet, but I'm not really looking for any bearish opportunities yet on silver. I don't really see it give me any opportunities to have a high probability situation. We can see that if we do get a breakdown below 1475, a test of the low wouldn't really surprise me, of maybe around $12. But, we'll see how it goes. There's a possibility for head and shoulders here as well. I am looking at silver as a little bit more of a bearish opportunity just because gold is way more bullish in terms of the larger macro weekly chart. But we got a left shoulder, a head, and if we get a nice little dip and then a pullback forming our right shoulder, that would be a good opportunity in my personal opinion. Not financial advice, but entering above entering above 1475 short is pretty well fighting the trend because you have such a strong level of resistance turning into support. So if you do see a dump down here, try to draw maybe a descending zone. Once it consolidates and holds this zone as a resistance, then that'd be a good opportunity to look for some downside exposure in my personal belief. And if that's the case, if silver is looking a lot more bearish, we're going to see gold drop below the ascending trend line as well, which would then give me a little bit less of a bullish sentiment on gold, which would be this ascending trend line here. So if silver breaks to the downside below 1475, gold's probably going to break below the ascending trend line, so my bias will be shifted. So we got a couple options. Bullish on precious metals for now, looking at gold, but if things do change, silver is a potential option, but I'm more favoring gold's opportunity here, but that's just my 2 cents. All right. Gold and silver ratio, not a whole lot has changed. We are seeing slightly higher lows, getting a nice little squeeze here. If we just draw something like this and then draw a nice little descending zone kind of like that maybe. We got a nice little squeeze here, so I wouldn't be surprised if we get another attempt to hit the 120 plus highs, which would then obviously mean that silver is going to be even more undervalued, which means two things. Gold's either going to go down and silver is going to go down more, or gold's going to remain relatively stable and silver is going to go down if this goes up, because this the higher it goes, the more undervalued silver is, and the lower it goes, the more undervalued gold is to some degree. But on average, we're very undervaluing silver right now. All right, let's close all the drawings. Now let's look at crude oil, WTI, sorry, not UTI, WTI, crude oil. We see a very strong level of support at around $20. We're sitting basically at $20.50, but we can see very clearly that this is a strong level of demand. Now what we're seeing right now, in my opinion, is a nice consolidation sideways. We formed a previous resistance to a new nice level of resistance. And if we do look on the weekly before we dive into the smaller time frames, it is a pretty good zone of confluence connecting the lower lows, as we can zoom out all the way, starting back. Let's just draw this right here. And 2004 is when this trend line initially started for me anyways. And then we saw the next touch at January 2016, and then now we're holding this low right now. So we can see that this is a strong level of support for our confluence. So we have to understand that. Now diving into the smaller time frames, how we're going to be viewing this market is now a consolidation. We have broken the descending zone, or the descending structure of the market, because we've held a low, held a low, held a low. This was the true test, this squeeze. We got a bit of a short squeeze here where the shorts got out of the market. FOMO people started entering in and pushing the price up. We did hit our major level of support at around $28 to $30. First, it was a support turned into a resistance validated by this double top. And now we are testing the support, and now we're just going in a sideways consolidation in my personal view. Doesn't mean that we can't go higher or can't go lower, but right now we're just forming a nice consolidation sideways. So how I'm going to view the market is we're going to be looking to buy here and sell up here, right? That's basically how I'm going to be viewing it. We could draw a descending zone. In my opinion, that's way too early. We could see another pop and then another second pop. And once we see one, two, maybe a third or a fourth, and then we still see it squeeze, that would be a high probability like we saw here. We saw 1, 2, 3 valid tests of a support. And we saw 1, 2, 3, 4, 5 tests. So that was a very, very well-respected squeeze, and that's why we got such a sudden surge, because once that descending zone breaks, a lot of people are going to be shifting their minds. A lot of short sellers are going to be taking their profits. So if we do get something similar where we're going to get a squeeze, where we get a descending zone and a horizontal zone and the price is playing in between them, we have an edge trading that, so we could be looking for opportunity. But as of right now, in my opinion, it's still too early. We don't really see that nice descending zone come into play yet, so we would be looking for that. We have 1 and then 2 touch points, so we could be looking for a third and possibly a fourth before we really get any sort of pattern that we have an edge trading. But that doesn't mean that you can't have an edge trading whatever you're looking at, but that's just from our perspective. All right. That is going to be the commodities for the day. Now let's go on to the indices and a little bit of Forex here. So first, let's talk about the daily chart here on the SPX, and then we'll go over the more smaller term time frame, and then we'll end off with the US dollar index, which is in relation with our trade for the SPX short. All right, so let's get a little bit of coffee, and then we'll continue on. All right, so this is going to be the daily chart, and this is actually tracking the index, the underlying asset index, basically. So I trade contracts for differences, CFDs, which are kind of like future contracts in a way. You're trading a contract which is tethered to the underlying asset, which is the S&P 500 index. But, you know, you can use whatever instrument you want. I like to use contracts for differences, but hey, everyone is different. So going back to the daily chart, what are we looking for? We're looking for a retracement to the 61.8 fib level or 50%, and we got the high, the swing high and the swing low right here. Remember earlier in the video, we said that the IMF, other thought leaders within the economic community are basically saying that this is going to be way worse than 2008. This is 1930s level, Great Depression level, and this is only a 30% drop from top to bottom. 2008 was 55%. And 2001 was 50%, and this is only 30. So I just don't understand why so many people are bullish. But obviously everyone has their own viewpoints. Everyone has their own reasons. I'm not going to say that you're right, I'm wrong, you're right, whatever the case may be. But that's what's great about the markets. Everyone has their own opinion. So basically what we're now looking at is this ascending zone right here on the large time frame, and what we can see is another smaller squeeze that is occurring right here, which actually broke out to the downside. And we'll look at that on the 4-hour time frame. So basically, for the larger view, I am expecting a lot of sell pressure to be around the 618 to 50% zone. This is going to be the major supply zone. And what we're looking for is price action patterns around this area that give us a high probability to enter a short and still manage risk. That's basically what we're doing, because our bias is short. And that said, now let's zoom into the 4-hour, and then we'll get into the smaller time frames here with the ending of the 1 hour. So now let's zoom this a little bit here. I did put the 382 retracement on this one. We did as well, but I just put that there because I wanted to illustrate where that zone is. I don't really think we need it at this point. Let's do visibility, 328. So we're mainly just looking at the 50 and 618 level. So what do we see on this 4-hour chart here? Let's take a snapshot and then discuss really what we talked about on the daily, but in a little greater detail, because we can see the zones in a little bit more crisp view on the 4-hour chart. So let's first identify our wedge. Where are our zones? First, our resistance zone. We see a support turn into resistance, 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 resistance. So we see 1, 2, 3, 4, 5, 6 respects of this zone, pretty well defined in my personal view. And we're not looking to enter short at the highs. We're looking for breakouts, weakness within the bulls. That's what we're looking for. And then we see the major structure support with the low and then the higher low. We just connect those zones to create our more ascending trend line, creating our wedge pattern, which is like this. So on the larger time frame, this is pretty well respected. I'm pretty happy with this overall structure. But a sneaky trend line is this guy right here, which in my opinion could provide a bit of a feeler opportunity, which is like a front run of your trade. Let's say, we call these feeler trades. So let's say you have a very strong bias and you want to have some exposure to the market, but you don't want to put on a full trade because you want full confirmation, which in my opinion, with the break of this ascending zone and a break of a horizontal zone, creating a confluence. Once that breaks, that's a pretty solid opportunity to short in my personal view. But what we're looking for is a break horizontally and ascending trend line. But let's zoom in here. I don't really think there's much to go over. I talk about this every single day, and it's like so ingrained to me, so I might skip some stuff because if I'm talking about it every single day, I might go over some stuff, I might not go over some stuff. But anyways, this is the 1 hour time frame. You can definitely see the structure is a little bit more clear on the hour. And let's discuss this minor squeeze that's occurring within the wedge pattern. Let's get our 1 hour time frame. So we got our very strong resistance. We see rejection, 1, 2, 3. And then we see a resistance turn support, support, support right here. And then support. And now it's going to be a new resistance. So in my view, this is a pretty good opportunity here because not only have we broken the minor ascending zone, which is this guy right here, we're also breaking market structure, seeing a series of lower lows and lower highs. So let's actually zoom in a little bit more clear. I hope I've illustrated where we actually are on the 1 hour time frame because perspective really matters. All right, so we broke down below the zone. In my view, I view it kind of like this, as this is a zone. You could argue that this is a bit of a head and shoulders where you see the head right here, you see the left shoulder right here, you see the right shoulder right here. We made a move down right just above the 50% retracement level, and then we made a strong push to the downside. And then what I looked at and said, wow, this is a potential move, is breaking this series of lows right here. We got a huge bearish candle, and then we got a pullback validating the previous support as a new level of resistance, not just once but twice. So this is 2 injections of sell pressure coming into the market, driving the price down, holding the previous support as a new level of resistance in confluence with our ascending zone. So in terms of opportunities, this in my opinion is a decent opportunity here because you have not only the series of lower highs where we see the higher highs and higher lows, you see consolidation, not able to form a higher high, holding that low. So in this view right here, we're holding a consolidation. This is again a head and shoulders in my view. So then we broke down below the support, and now we're testing the ascending zone and horizontal zone as a key level of resistance. So it's looking decent. Looking at the 4-hour chart, let's just quickly take a look here. Got around just under an hour until this candle closes, but we do see the 4-hour clearly broke below the zone, and we're testing the previous support as a new level of resistance on the squeeze. So obviously I can't give financial advice or anything, but it's looking pretty good. It's looking like it's showing some weakness here, and that doesn't mean that we're going to get an instant drop. This is obviously a swing trade for any people who don't really know what we do. We're looking to hold for 3, 5, even weeks, depending on how well the trade is doing and how far the take profit is. But in terms of where we currently are right now, I don't mind if it's consolidating, but breaking this squeeze of this ascending zone, in my opinion, was a pretty significant move for the price, because now we're going to be playing within this half of the zone. So we're going to come down probably here, play around here, and in my view, that's just asking for a potential move down. We've already tested the 50% level once. This is the 61.8. We got a squeeze at the 50% level right here. This was that squeeze with a large supply area around the 50% level, and then we tested, moved to the downside, our pullback, and then I think we might be testing this ascending zone here. We might start to come back up and then test these highs for a double top. That's happened before. That happened in 2001, where you saw this supply zone get tested twice. Let's actually look at that right now, because this is important. So let's just create some context here. What we're talking about is, instead of just a move up and then a wedge and then a fall down, you never know. You could be seeing like a little double top here, where you get a test not just once but twice. So we got to be really careful. We got to be really cautious, but we got to be patient. That's the biggest thing. If your bias is down and if it starts to come back up, in my opinion, if your bias is down, you got to sit through it. Yes, you could capture some profits and wait for the price to come back up. But in my view, I'm going to be very patient, enter kind of as close as we can here, and put my stop loss in a solid place where I'm giving the price room to breathe. Now let's look at that double top that occurred in, I believe, 2001. So let's look at all the way in 2001 here. I'm just making sure I'm not doing the wrong one. I'm pretty sure it wasn't 2000. This is right here. Perfect. Okay, so I'm sure you know our structure that we're going off of. If you don't, here is a quick refresher of the structure we are looking to implement basically within the bear market that we're going to have. Within 2001 and 2008, we had the same structure play out in front of our eyes. We have a long run up. This is the bull run. This is the bull run. And then we saw a massive push to the downside. We're calling this P1. P1. We don't need to trade P1. Nope, don't need that, right? And then we have C1. And then we have P2. So this is P2. And this is C1. Correction 1. And then we have correction 2. Correction 2. And then we have P3. Pushes 1, 2, and 3. Correction 1 and correction 2. Let's go like this so everyone can see on the TikTok. So what we're looking for is, we've already done P1. P1 is going to be, let's say, the first pullback, right? And we're looking for the 50 or 61.8. 61.8 is here, and the 50 is here. And we're looking for that retracement, and we're looking for weakness at the 51 to 61.8 retracement level on both C1 and C2. So let's overlay on the actual structure of 2001. Even if we just go and like replay it all the way back here and we don't even see this push up, where is the nearest major swing highs and lows? Very simple to understand, right? Let's look at 2001, major swing high here, major swing low right there. Where do we put our fibs? That is exactly where we put them. Right, like so. So what can we see? So we're looking for, this is C2, right? So, oh, I just did that. So let's just do that again. So we're looking for this pullback. This is what we see, right? On this pullback. But what we can see on the pullback is there's actually a double top where we get not just one pullback, but we get a second one. So this is initially what we're seeing right now. And then we're drawing a trend line. And you could, I guess, argue this is somewhat of a squeeze. Let's just say that's a squeeze. And you don't see any of this. And let's just see that you see a breakout. You're going to assume that it's just going to continue downwards because it's a push, exhaustion, push. But you don't get that. You see the price hold previous levels of support or resistance, and you see it come back up. Now, this might occur within our structure. And because we've seen it happen before, we're going to assume that hopefully we hold this supply zone at 61.8 to 50%. We've seen it double top before. We've seen the bulls attempt to push the price back up to the highs and break it, but the supply did hold. The bears were able to keep the hatchet down and push the bulls further down. So we have to be all right with having some drawdown, in my personal view, if you're looking for that next leg down. But entry is key. Entry is very important. So like looking at this zone, once it breaks that zone would be a good opportunity, but then at the end of the day, you're wanting that stop loss well above the high in case of that retracement. You don't want to be taken out and then missing that huge P3 or P2 move that we're looking for. So in that said, that's basically the analysis for the S&P. Let's just zoom all the way out and go to our trade all the way up here. And we can see we could form it. Obviously, we don't have a crystal ball. We don't exactly know. But in terms of opportunities, it's looking like a pretty good opportunity slowly coming here. I am definitely bearish. I am looking for shorts. I am looking for opportunities to partake on the downside exposure. So take that with what you will. I'm definitely thinking that we're going to get another leg down. I don't really have much more to say on that. So now it's more talking about the relationship that different asset classes have. So let's say that our thesis is correct and the S&P 500 is going to go down. Now we have to remember every single US stock, every single commodity, basically coffee beans, gold, silver, oil is paired with the US dollar, right? So if there's a big sell-off in equities, let's say the S&P falls. Well, this means in order to sell an equity, you have to buy the US dollar, right? That's how the relationship works. And it's not just US equities. It is gold, it's silver, it's oil, it's a lot of commodities. Just those are some of the ones, right? But the US dollar is the world reserve currency. So what this means is that's going to be how a lot of transactions are going to be based on. So you give me this product or service, I'll give you dollars, because if there's a bunch of different currencies, it's really hard to compare. But if we have this one currency that a lot of people use, the US dollar, well then that makes trade a whole lot easier. And that's currently what's happening is when we see these big dives in equities, in commodities, you're going to see the US dollar push up because of the fact that people need to buy the dollar to get out of commodities and equities. So let's now look at the US dollar. This is going to be the DXY, which is the US dollar index, comprised of around, not exactly, but 60% euro, 15% yen. There's some GBP, there's some Swiss franc, there's some krona, and I don't exactly know, but basically the major ones are euro and JPY for the majority bulk of this, because you have to compare something with something, right? Many people don't even know, like with equities, is let's say you're buying Amazon stock. You're comparing it to the US dollar. Let's say you're buying real estate. You're comparing it to the US dollar, right? So when you see these massive price appreciations over decades, it's not just that stock and the value of the company going up. It's also the devaluation and the debasement of the US dollar. So like let's say you're looking at gold. It's not like the value of gold is increasing. It's just the value of the US dollar is decreasing, which is making the amount of units it takes to convert dollars into gold more and more and more and more. Same as real estate. Yes, with more people on the population, with less space to live with more people, real estate will go up. Just simple fixed supply with the amount of real estate and growing number of people. But looking at it in the same boat, right? If you sell real estate, you're going to convert into your native currency if you live in a first world country. So you got to take that into consideration, and understanding that relationship, we can see that the DXY is looking like it could break out here. Let's first initially go down to the daily time frame, because we really want to understand the longer term chart. We see that we had a massive volatility event that occurred from February 19th to March 6th. Excuse me. We got a massive bearish move, but really soon after the market had a meltdown, the US dollar just absolutely skyrocketed, going from 95 all the way to 103. In a plus 8% move in the FX markets is absolutely massive. So what do we see right now? In my opinion, we see a pretty significant squeeze on the daily chart. We can see it is creating lower highs and higher lows, squeezing the price closer to the apex of the pattern. Let's go to the 4-hour chart for a little bit more detail. Let's get our snip here, and we see that descending zone is well respected. Anchor point, we see 1, 2, 3, and then we see 4, 5, well respected descending zone. We also have a horizontal zone kind of midway within the pattern, and then we have our structure low, which is creating higher lows. So it's looking pretty good overall. One thing to note is a wick right here. So we did break on the 1 hour and close above the zone, which was pretty bullish, but the 4-hour did close below the market structure low, which is around 99.55. So if we start to get the price to actually hold above that zone, I am going to assume that there's probably going to be a shift in trend, testing at least 101, maybe even the high of like 103. But with these massive moves, we're probably going there's a lot of room to retest. So we might not retest the very top, but when we get these massive pushes to the upside, there's a high probability of it retesting this zone here. Again, we saw the exact same thing in gold. So understand the huge move up, the consolidation, and then the retest of the highs. Gold did this exact thing. Let's just jump to the 4-hour time frame. Massive rally, and then it retested the highs before a huge breakdown, right? So we can see, if we just think about that formation where you get a kind of a parabolic huge move up, a correction, and then a retest of that high, we can see a huge move up, a correction, and then we're squeezing, and it looks like we could be pushing up here. And this could all come together pretty well, because if the stock market does move down, DXY will move up, which would obviously be a good correlation between the two, or be a negative correlation, but it would be a good relationship between the two. So that's what I'm going to be looking for. Like I said, it does look a lot more bearish, but we don't really see it close yet on the DXY. If we do see this start to trend up and the SPX look weaker and weaker, that would be a great relationship. I'm not saying that you should have exposure in both instruments, because that would be kind of overexposed. That means if you're wrong, you're only going to get that loss on the SPX trade. So looking at the smaller time frames, we see that the candle closed above the zone, which is good on the 1 hour time frame, and also it definitely should be. But you do have to consider the fact that people are buying into the US dollar when they're selling other assets like commodities, like equities. So definitely keep that into consideration. If we see a massive dump against with the stock market again, or a dump in the commodities market, we're probably going to see this go up here. So we'll see how it goes. It's in my opinion, a decent opportunity, but in terms of a larger time frame fundamental outlook for the US dollar, I can't be a bull for the US dollar. Look at how much stimulus is coming into play. Look at how much money printing is actually getting introduced into the market. And we can actually look at that right now to end off the video, the monetary base for the US dollar. And we can see absolute money printing mayhem. We've hit the high. We broke the high of 2015, when we tried to normalize the balance sheet a little bit, when we were reducing the amount of the US dollars in supply, so reducing the monetary base. And then recently, obviously, we've just seen an absolute uproar in the amount of US dollars that are being created out of absolute thin air because the government can. Mind you, central government, not municipal, not local, only central banks, because they are just wanting to be in power. I don't agree with it. I don't think that they should have that much power. But if you control the monetary supply, if you control the amount of money in a economy, you basically have almost complete control. If you can print value out of thin air, it's a pretty powerful tool, and you do not want to let go of that. So check out the crypto market update. We talk more about that within the crypto space, because obviously that's more related with trying to keep privacy, keep anonymity, keep freedom, because with talk of central bank digital currencies, more censorship, it's definitely going to be a hot topic that, in my opinion, should be talked about, because the governments will try to inch ever so slightly, a little bit every single day, take more and more of your freedoms and liberties. That's what they want to do. They want complete control, right? Why would you not? Not to be super pessimistic, but if a lot of people are living off of welfare or unemployment insurance, like as a government, you have complete control, right? You have food rations, you fix how much price of goods should be. That's a polar opposite of free market. I don't want to live in that society, and I'm sure a lot of you don't either. So what we need to do is understand that in these difficult times, the government will try to take our freedoms and liberties, and we need to fight for them if they are stepping too many boundaries. Now, I do agree some of these things should get implemented, but at the end of the day, governments will always try to have more power, and I don't agree with that at all. I think that true capitalism is really the best way to go about doing things, and government meddling will only make things worse. I know some people might not agree with me, but like 2008, little bit of a random discussion, but this is basically the end of the global macro update. 2008, the central banks got rewarded for bad behavior. What did they do? They dumped interest rates to basically zero, artificially lowered them and stuck them there for 8 years until 2015, I believe, when they started to raise the interest rates. And then they also implemented the 3 QEs, which obviously just injected shit tons of money into the markets, printed a lot of money, expanded the balance sheet significantly, and what happened? They got the longest bull market in history. Now, in my opinion, that's definitely going to be rewarded. That's going to be a reward for something that they did. So they see the action, and then they see the consequence. Action, shit tons of QE, zero interest rates, even potentially negative interest rates, basically destroy the savers, really hurt the savers, because those are the people that are putting money aside for a rainy day. You want to hurt those, they're hurting those people, because negative interest rates, you're paying to keep your money in a bank. That's total bullshit. And Japan, a lot of Europe, Germany, Switzerland, Denmark, I believe, already have negative interest rates. France, I believe, have negative interest rates. So they're already doing it, right? So they're already screwing you. Yeah, I don't know much more to say. Definitely try your very best to position yourself in the best way possible. I don't really know much to say, but that is going to be the completion of the global macro update. We will go over any questions that people have on the TikTok and YouTube, but I will close off the recording from now. Thank you very much for watching. If you found this useful, if you found this informative, definitely subscribe. We do these every weekday, so we go over gold, silver, SPX. We might look at the Russell 2000 because that's the small caps, and due to Bitcoin still being correlated with traditional assets. So if you don't know, Bitcoin is more correlated, positively correlated with the SPX, which is the S&P 500, and the Russell 2000 than it is with gold or silver. So it's a risk-on asset. Many people might not know. So just something to consider. It's not viewed as a safe haven asset yet. I think it will, but as of now, it's not at all, in my personal view. And we can see there's not a whole lot of speculation in the safe haven space either. In my view, we can look at that and understand that there's not a whole lot of speculation there yet. because silver is not performing nearly as well. Silver is actually not doing very well at all compared to gold, and silver is going to be the asset and the instrument that speculators use in the precious metals market when safe havens are hot, when inflation is running hot, right? So silver, in my opinion, is going to be a higher price appreciating asset than gold. But right now it's not, because there's not that much positive, or there's not enough positive sentiment in the precious metals market. There's not enough worry about inflation, I guess, or just uncertainty in the market, because the stock market's rallied so much. Everyone's like, wow, that was the bottom. It was like 2018. It was like 2016. It was like 2015, where we have these massive V-shaped rallies. I don't think it's going to be like this time. We can look at the rallies here, just quickly looking at 2018. Massive V-shaped rally, 2015 and 2016. Massive double bottoms, V-shaped rallies, and we're getting rewarded each time they're picking the bottoms. And right now, I think the people who are perma bulls are buying the bottoms and think that the bottom is already in, and they're basically going to provide liquidity. But yeah, we will see how it goes. Obviously, we've done an entire crypto market update and global macro update, so there's not much more to talk about. So that's the completion of the video. We hope you enjoyed it. I will keep this on and answer all questions. So thank you very much for watching, and until next time, happy trading, everyone. All right, that is complete. Let's just save it, and then I'll get the questions going here. Thank you very much, Fox, Pokey Poke. I don't really know how to say it. He said thank you very much for tuning in to our global macro update. We really appreciate it. That good coffee. All right, so let's go over some questions here. Really, yeah, this is just my personal opinion. It's not facts or anything. I'm saying that this is coming from a random person on the internet. Take it with a grain of salt, but if you have any questions that you'd like to bounce off or anything, definitely just throw them in the comments. If there's something that you might not understand, that you might want a little bit more clarification with, if I'm able to give you my take on it, that might be able to clear the fog for you a little bit. Obviously, that's beneficial. And if I don't know, I just don't know. Yeah, I'm not going to be going over any single equity charts just to go and break them down for you. All right, let's start the questions here on TikTok. What's your opinion on XRP? So if you're wanting my opinion on XRP, in terms of price action, we just did a crypto market update. So going on our YouTube page, we just made a video naming it Stablecoin Prohibition, China's Digital Yuan Coming Soon. So we did a technical analysis on XRP. Check that out. In terms of fundamentals, I think it's somewhat translatable. I do think that it is serving a problem that a lot of tokens are unable to do, because they're going through all the regulatory hoops, but it's just a matter of, will banks actually use their services? Because there's different layers, right? It's not just there's one product called XRP, there's XCurrent, there's XRapid. There's different layers, and it's just a matter of if banks are actually going to use the coin that the everyday retail trader is actually going to be using. So, not one of my favorites. To put it short, I absolutely love Bitcoin, Ethereum, and I think BNB is an absolute beast of a token, an exchange token. And I have a few other smaller investments in some smaller assets, but if you're slowly working into cryptocurrencies, I would definitely advise, this is not financial advice, but if I were you, I would just go with the largest cap coins. Cryptocurrencies and its crypto market is very early. It's still in its infancy, right? So yes, you could be more speculative and look for those smaller alts that have high rewards, but even Bitcoin and Ethereum is still very speculative. So finding projects that have the longest life, and you see things like Ethereum have so many projects built on top of them. So Ethereum's an absolute beast. TRX, BNB, EOS. There were ERC tokens, right? So these projects were spawned from Ethereum to some degree, right? So finding projects that have a lot of developers behind them, that is unless you're looking at the store value, Ethereum can do a lot more than Bitcoin. They are smart contracts, and it's a lot more programmable and flexible compared to Bitcoin, which is not really. So understanding that there are different attributes for different coins, tokens, projects is definitely going to give you a little bit more insight as to how to properly diversify a cryptocurrency portfolio. But yeah, we're not going to get into that. But yeah, super quick. I just like to stick to the main large cap coins in the cryptocurrency market. I'm not going to look for some tiny market cap, coin that is no one's heard of. To me, that's just not worth it to me. All right, Dow Jones 5K. JP Diamond says, 2022 world will be out of this swap. Swap? I'm not exactly sure what you mean of this swap. Let's continue working down here. For what reason the USD was so strong today? I hopefully answered your question, Ejan. Basically, every U.S. equity, every commodity, gold, silver, oil, coffee beans, they're associated in relationship and are paired with the U.S. dollar. So if you're selling it, you're buying the U.S. dollar. So the stocks definitely took a bit of a dive today. They gapped down and then they're closing red for the day. So there's people selling stocks moving into the US dollar. Let's see if oil's also down. Maybe not today, but it has been down. But mainly it just looks like it's the US stock market here. And there could be other commodities that are down that's driving the buyers into the US dollar. I don't exactly know, but that's how the relationship kind of works. All right. Followed by Afu. Thank you for following the host. All right, so that's basically the end of this YouTube live. I don't really see anyone else putting any comments, so that's going to be the end of the video. Thank you very much for everyone who was watching this. And if you have any questions for the next time, drop them in the comments below, and I'll be sure to answer them. So thanks for watching, thanks for tuning in, and until next time, have a good one.